Good morning. Morning, everyone. Thank you all for being here. I'm Tom Shoop. I'm Editor-in-Chief of Government Executive, and it's my great pleasure to welcome you to this, the third and the final in our Excellence in Government series for 2011. It's great to see all of you here. It's great to see so many familiar faces and some people who are new. If you have been here with us before, you'll notice a little bit of a difference in our look. It's not quite an extreme makeover, but it's part of our effort to upgrade the design of everything that we do and the substance of everything that we do as well. The process started with a complete redesign of our print magazine in October, which I hope most everybody in the room has seen by now, by the world-class New York design firm Pentagram. You might recognize their work from our sister publication, The Atlantic Monthly. Oh, there we are, and you might recognize that theme on the October issue. But Pentagram's also done other publications such as Time, Money, and New York magazines, so we feel like it's nice to be in the same class with them. The idea was to give Government Executive a clean, fresh, contemporary look with a business magazine feel, and that's only fitting since all of you, the people that we serve, run some of the biggest business organizations in the world. They just happen to be in the federal sector. The redesign also better integrates all of the work we do, so you'll see in the magazine, for example, new sections devoted to govexec.com and NextGov, our technology-focused site. The great thing is that the work we've done on the magazine isn't the end of what we're doing, it's just the beginning. We've been serving the government sector for more than 40 years, so now we have our 2 websites, the magazine, a host of e-newsletters, dozens and dozens of both live and online events, and a rapidly growing research operation called the Government Business Council. So we're investing in growing all of these areas. So what if you like from us is daily news, you'll get more of that. If you like long-form journalism, you'll get more of that in the magazine. If you like in-depth research on best practices, you'll get more of that. And if you like events, like this one, you'll get more of that too. But that's enough about us for now. Today's conference is focused on performance, management, and efficiency. There's little doubt that we're in a new era in government. Budgets, personnel, and resources are being cut, and yet the public continues to demand effective, high-performing government. So today we're going to explore some ideas for driving performance and delivering on your agency's missions while simultaneously planning for tighter budgets and mandates to increase efficiency. You'll learn how to make a compelling case for your program, which is an important thing to do these days, how to be a more effective leader in your organization, and we'll explore lessons learned from previous cutbacks at both the state and local levels and in the federal government in the 1990s. We have 3 great keynotes for us today, beginning with HUD Secretary Shaun Donovan this morning, continuing with author Dan Rome at lunch, and closing with OMB Associate Director for Performance and Personnel Management, Shelley Metzenbaum, this afternoon. So we're going to get right to it, but just before we do, I'd like to introduce the underwriter of this morning's session and our knowledge underwriter for the entire day, McKinsey Company. McKinsey Company is a global management consulting firm dedicated to helping the world's leading organizations address their strategic challenges. McKinsey advises on strategic, operational, organizational, and technological issues and helps a diverse range of government institutions and nonprofit organizations with their management challenges. By drawing on their private sector experience, they work to enhance the effectiveness and efficiency of government institutions, enabling them to better fulfill their missions. They also work with government agencies to develop the strategies and capabilities needed to address the leadership challenges that matter most. I'd now like to introduce Deanna Farrell of McKinsey, who will come forward to say a few words. Deanna recently rejoined McKinsey as a director after holding the posts of Deputy Director of the National Economic Council and Deputy Assistant to the President on Economic Policy at the White House. Deanna?
Thank you, Tom, and thank you all for joining us today. We are very delighted to be part of this conference. As we reflect on the, can you hear me if I walk away from the mic? As we reflect on the world as McKinsey sees it, which is really a view of what's happening across countries, what's happening across industries. The challenge that you are here to talk about today is really one of the most profound challenges facing society, which is how do we enable and facilitate government taking on not only more challenges, better challenges, and do so in a world of much fewer resources, much more constraint. And this is, of course, a principal challenge playing out in the headlines here in the U.S., but not just here, everywhere in the world. And we're committed to helping solve that puzzle, which is ultimately a productivity puzzle that has been solved through innovation around the world, through the development, the diffusion, the scaling of innovations. But when we reflect on, in addition to the very broad mandate that many of you in agencies have, what are the additional challenges that you're going to face? Well, we see government taking on expanded roles that they previously were not particularly set up to take on. So the FHA, as an example, had a pretty narrow mandate at one point. It was under 3% of the mortgage market. Today, it's nearly 35% of the mortgage market. We have innovations in the technology and competitive space that are outpacing the processes that the government has set up. So take it as an example, despite the reforms that the PTO has put in place to try and reduce backlogs, and they've done that quite well, there's still over 1 million patents outstanding and a backlog of some 35 months. We have demographic changes that are pushing pressure on a lot of the government services, aging, other demographic and health issues. And so the Social Security Administration, again, despite efforts to improve that, has huge backlogs in disability claims. The VA has 750,000 benefit claims for veterans outstanding. In top of all that, you have an even increased regulatory and compliance enforcement mandate, whether it's healthcare, whether it's financial system reform, whether it's clean air and water, whether it's cybersecurity, whether it's security in food chains. And so we find ourselves in a conundrum, which is government often vilified in the press, to our consternation, and I'm sure yours, being required to do more of the things they've traditionally done, do better with new and the things they've traditionally done, but asked to do it with less and less all the time. So what today can be, and we hope it is an opportunity for each of you to share the innovations that are taking place across, and we see lots of them as we work with many of you, and to find ways of getting new innovations, diffusing those innovations, scaling those innovations. And there are a couple of places where I think we are particularly excited about some of the things that are going on and could go on. One is around the budgeting process, being strategic and proactive about management. Experiences, many of the agencies in government have taken a relative passive approach to budgeting, which says it's what percentage this year over last, as opposed to saying, how do we use the budgeting process as a mechanism for achieving transparency into what we're doing, not just to inform the outside world, but internally, so that we can prioritize things better, allocate resources to higher priorities, so that we can introduce improvements that ultimately are revenue neutral. Agencies are doing that. We see pockets of really interesting innovations in that way. We expect to see a lot more of that. A particular area is in IT spend, where we've seen an ability to look across the whole budget and find real opportunities to do IT services better with less resources. Smart talent management, workforce planning, utilization, thinking much more about capacity rather than traditionally bringing in new people to do new mandates, rethinking the entire workforce, whether it's virtual communities of workforces or in individual workforce planning exercises. We've seen a lot of agencies do interesting things with mixing the shift of activities with the same people they have. Again, doing more, doing better, but not necessarily with more resources. And then, very interestingly, more of what we call a risk-based approach to resource allocation. And so you have, as an example, FDA, FBI, who have just an extraordinary mandate with very significant consequences and risks, very few resources to cover all those, and so finding interesting ways to use the vast amount of data available to the government to to tap into risk-based approaches to achieve full compliance, full enforcement. Those are really interesting ideas we think have broad applicability. I highlight those three because we do see more potential for those ideas in many of the things that you do, but I'm sure that over the course of the day we will learn a lot from what you all have to say, and hope you will learn from each other. So we're very enthusiastic about this, and I'll leave with a note of optimism, which is that while this challenge is really extraordinary, and I'm sort of always frustrated in the broader discussions about the fiscal situation when we realize that so much of the pressure for delivering on less government, so to speak, comes to the discretionary budget of the whole picture of government. It's only 19% of the picture. So you're all being asked to carry this extraordinary burden of reductions when the entire sort of fiscal issue is actually a much, much bigger one, as you know. Just the amount of innovation that we see working across many of the agencies in the US, across the world, leaves us with a relatively optimistic note that a lot more can be done so that government can provide the services it has provided, new services as it will, and to do so in an increasingly innovative and productive way. So good luck with your day today, and very glad to be here with you.
Good morning. I'm Pat McGinnis. I think I know many of you, as I have been involved in the Excellence in Government business and the Excellence in Government conferences for quite some time. I want to thank Deanna for McKinsey's support, both with knowledge and making this possible, and also to thank Tom Shoop and to congratulate you and the whole government executive team for producing this great conference in the context of all of the multimedia that you described. Just wonderful. And I'm especially delighted to be here with my friend Tim Clark, who I don't think is in the room, but he will be in a minute, government executives editor-at-large, who I think all of you know. I mean, my introducing Tim Clark is seems a little silly, although I hope that some of you are new to this conference and might like to know that he was also editor-in-chief, publisher, and president for more than 20 years. And as you'll see in a minute, he looks so young. Tim and I have been partners in many initiatives, including the production of these conferences beginning in 1995. He's not only a great journalist with a deep understanding of how government works, but he's also a great guy and a very good friend. Tim is going to be interviewing Secretary Donovan in this morning segment. And I also want to thank all of you who are here today. I'm delighted to see such a big, full room, to listen, to learn, to share, and to brainstorm about how to meet the challenges that you face and your agencies face with strategic, innovative, and results-oriented approaches. Today's focus on the efficiency imperative could not be more timely or relevant as we look around us to see what's going on. If necessity is the mother of invention, then today's definition of necessity, rising deficits, declining and uncertain budgets, Congress in a state of paralysis or denial or both, public trust and confidence in the federal government at an historic low, that definition of necessity requires all of you, each of us, to step up, reach out, and reach in to find new ways of managing, motivating, and innovating to achieve more with less, and most importantly, to improve the lives of the people we serve. In the atmospherics of Washington these days, with so much negativity in the air, it's really hard to sometimes focus on what brought you into public service and how rewarding it is when you make a difference. Public leaders and entrepreneurs, that's what you are. I want to read an ad that appeared in the Wall Street Journal a few years ago. It actually was in support of the Innovation in American Government Awards, and Shaun Donovan, when he was in New York City, won one or two of those. But this is what the ad said. Think about it in the Wall Street Journal. They invented the internet. They cleaned up our air and water. They set the standards for safety in air travel. They decoded the human genome, and they made sure our children were immunized. Where can you buy shares in a company like this? You can't, because it's already yours. It's your federal, state, and local government. So think about what that ad might say now. It would be even more powerful. Today, each of you face a critical leadership test. We have to define a better future for the people we serve and chart a path that is at the same time realistic and aspirational, practical and innovative, collaborative and yet rigorous, compelling and also accountable for progress and results. Our keynote speaker this morning could be our role model. The path that he has charted as a public servant can be described with all of those adjectives and more, and the results have been excellent. Shaun Donovan, you all know, is Secretary of Housing Development, and as the youngest cabinet member, he came to this post with a wealth of experience as an engineer and architect with service in local and federal government as well as in the private sector. As Commissioner of New York City's Department of Housing Preservation and Development, he led the creation and implementation of the department's new housing marketplace plan to build and preserve 165,000 affordable homes, the largest local affordable housing initiative in the nation's history. Shaun and his team also created the New York Acquisition Fund, an award-winning collaboration with banks and foundations to finance affordable housing, followed by an innovative, inclusive zoning program and the Center for New York City Neighborhoods, which was one of the earliest responses to the foreclosure crisis. It's no wonder that President Obama tapped Shaun Donovan to come back to Washington. He had served as the Deputy Assistant Secretary for Multifamily Housing in the Clinton administration to come back and be the Secretary of HUD. It was a signal that affordable housing was a top priority for this administration, and he has approached the housing and economic development challenges strategically and entrepreneurially, as you would expect after his incredible record in New York City. The strategic planning process at HUD, which I hope he will talk more about, was not business as usual when he came to Washington. It was a true team effort to set ambitious goals and plan a substantial transformation of the department and its culture. Secretary Donovan, and this I believe is unprecedented, even convinced the Congress to allow the department to set aside a small portion of their appropriated funds to invest in this transformation. I don't want to steal his thunder, so to hear more about all of this from a tested and accomplished leader, please join me in welcoming the Honorable Shaun Donovan and Tim Clark, who will be the interviewer. Dun-da-dun.
Thank you very much, Pat, for that kind introduction. Welcome to all of you, and a special welcome to our guest, Shaun Donovan. Thank you very much for being here, Mr. Secretary.
My pleasure.
It's kind of you to take the time. This conference, as Tom Shoop has told you, is about performance and management, and we're going to talk about that topics. And we have sessions later on some of the topics we'll touch on now, including performance, including budgeting, including communications about federal programs. But I thought that before we get to that, we should ask Secretary Donovan a kind of a broad question about, in a way, the role of government. He sits in a position that is a central position in one of the key crises of the moment, the housing crisis. And the housing bust, as we all know, is at the center of our economic problems. People have lost trillions in net worth. Many homeowners are underwater on their mortgages, and thousands of homeowners still face a foreclosure. Economists say that the economy will not recover until the housing markets stabilize. We tend to think that government can fix most anything, but here we're really being tested, and we are seeing the limits of government. So I want to ask you, Mr. Secretary, if you would start out by telling us a little bit about the lessons that you have learned about the role and the limits of government at this particular point in our history.
Yep. Well, first of all, Tim, let me say thank you for inviting me this morning and for all your leadership at this conference over not quite 2 decades yet, but a remarkable period of time and a remarkable career in attracting people and really making sure the broader public knows the contribution of public servants to the work that of the country. So thank you, and thank you to Pat as well for your leadership here. And I could ask Deanna to come on stage and help me with this question, given her deep role and really remarkable leadership in the administration in the first few years. We miss Deanna, and it's great to see you. So thank you. You know, I think you're exactly right about how to think about the limits of government in something like this, and also how to communicate clearly expectations about what's possible and what's not. And I think we learned some tough lessons early on in the administration. A new administration comes in, we're going to throw everything we have at something, we're going to fix this problem. And I think there has to be a careful balancing of, you know, what is possible when you're facing a crisis. I mean, think about the president walks into the Oval Office, housing prices have been dropping every month for 30 straight months. $7 trillion of wealth has been eliminated at that moment. And as much as you can possibly say, you know, we're not going to fix this overnight, it's hard for people to hear that. And it's sort of the relentlessness and the patience that's necessary to manage a problem like that is incredibly important. And I think it's also, as we've learned, frankly, it's very hard to convince folks, well, look, it could have been worse, right? And I fundamentally believe that. I mean, the expectations were that housing prices would drop another 5 to 10% the year the president came in. They actually went up about 5%. Foreclosures are down from where they were a year ago by about 40%. We've made real progress. We haven't made as much progress as we would have liked to make and need to make. And I think one of the key things that I've learned is that in a problem like this, which is so fundamentally a private sector problem in the sense of the scale of it, that the government can do a piece of it, it's how do you intervene strategically? How do you create a set of programs that really do have a ripple effect into the private sector and that are working with the sort of incentives and the direction of the private sector rather than against it? And let me just give you an example. Our modification program is something that we thought could reach 3 to 4 million people over 3 years. We've reached about 1 million at this point. And so it's clearly underperformed our expectations. On the other hand, perhaps its most profound impact is that at the time the president came into office, before we created our modification program, the average private modification by a bank was actually raising payments for homeowners. You heard that right, not reducing, but actually raising payments. Today, the average modification done by the private sector without any government help lowers payments by about $300 a month. So there's been a fundamental change, and there are over 5 million families that have had their mortgages modified. So as we're looking at what more we can do, there are 3 areas where we've really focused on ways we can leverage private sector action. One is the president just recently announced that we're going to be accelerating the pace of refinancing for underwater mortgages. And that's for somebody who might have a house that's worth $100,000 but a mortgage that's $150,000. They may have a mortgage rate of 6%, but today's rates are close to 4%. What's interesting there is we found a sort of sweet spot, if you will, where you can reduce the payments for that homeowner. It's about $2,500 a month on average, and actually save money for the taxpayers, because by lowering that payment, you're making the mortgage safer. It's already on the books of Fannie Mae and Freddie Mac. The taxpayers are already on the hook. By lowering those payments, you're actually both saving taxpayers money and doing something to help the economy. And I think we have an opportunity to do that around principal reduction. And there's also a very important element of the Jobs Act, Project Rebuild, that does double duty in the sense of creating 200,000 jobs, fixing up foreclosed and abandoned homes. But fixing up those homes also has the ripple effect of raising property values in the surrounding community. So it's a strategic intervention at a time of limited resources where we can get much more bang for our buck, if you will, by making that kind of investment that's much more strategic. And those are the kind of tough choices we've got to make today, to say, where do we really have programs that can, if 1 + 1 = 3 in that case rather than 2, because it has these broader ripple effects.
So you alluded to the issue of principal reduction, and most of the interventions, as I understand it now, have been on the payment level, that is to say, and not principal reduction. So there's still a huge amount of debt out there, and that is thought to be, I think, a continuing problem going forward in the economy. I know there were debates early in the administration about whether there should be more principal reduction and how that would work. I know it's very, very difficult to do. The banks don't want to do it, et cetera. But what about that? Is that on the horizon? Is there any real hope for doing anything much on that?
There is, and again, this is a place where, given the both political and fiscal constraints that we have, how do you find strategic interventions that actually can move forward in this environment? I think early on in the administration, we focused on getting people's payments down as the short-term solution to how do we stop foreclosures, but there was always this longer-term looming challenge, and we've had some real frustrations. We had a bill that would have changed the bankruptcy law, that would have helped to create a path to lowering principal. We missed by a few votes early on in the administration. There's been a lot of resistance to doing principal reduction. It's one of those classic problems where if everybody looks at their own incentives in a narrow sense, they'd say, well, I'm not going to write down that principal because that's an immediate loss, or looks like an immediate loss on my books, without recognizing that if everybody does it, you can lift the housing market more broadly, and it has ripple effects that can improve your own portfolio of other loans. So it's a classic problem that I think the real opportunity there, if I could describe it this way, is we have now a whole series of both public and private enforcement actions that are happening around all of the various mistakes and even law-breaking that were done leading up into this crisis. And I think without intervention by the government, what we're likely to see is hundreds of billions of dollars of disparate enforcement actions by state and local and federal government, as well as private suits, investors, hedge funds and pension funds that are suing banks, all in this very uncoordinated way. And I think the opportunity that we see is that if we can make sure that as these suits and these enforcement actions happen, not only are our payments going to the investors in these loans, but take a simple example. If somebody who bought a private label security that they thought was worth $1 is suing the person that sold it to them and saying, it was really worth 75 cents, you've got to pay me 25 cents, and they are going to settle that. What we need to do as the government is make sure the underlying loans in that security are also written down by that 25 cents. In other words, that we have homeowners that are actually benefiting from principal reduction that's associated with all these actions. And we're very close to setting up the first model settlement like this, which could be a model for future settlements, that is around all the robo-signing and other issues that we've seen. And the basic idea here is, rather than just taking penalty payments from all these banks in cash that would go to federal agencies or others, will take a significant portion of those penalties as write-downs of loans in their portfolio. So the effect there is that we could likely get about $40 billion of principal reduction from a settlement that's actually smaller than that. And why is that? Because writing down $1 of loans is actually less expensive to those banks because they already expect some loss. So we can get a big magnifying effect to get up to $40 billion of principal reduction if this is something that we could replicate in a number of other places around origination problems and securitization problems. We could have the opportunity to really begin reducing principal at a very large scale. I think we have other ways that we're going to pursue this. There may be legislative or other avenues, but this is an avenue that we can take without action by Congress, and where we do have clear enforcement authority to be able to say, no, you have to do this, rather than it just being based on an incentive or other voluntary ways that have been difficult to do in the past.
And that enforcement authority is in your department or elsewhere?
And this is one of the challenges. Mm-hmm. One of the things that led us into the crisis to begin with is that our regulatory structure, the securitization of these loans, where they were sliced and diced into dozens, if not hundreds, of different tranches of ownership, makes it hard to bring together all these enforcement actions. In this case of this servicing settlement, we've brought 50 attorneys general and 10 different federal agencies around the table, and that's just on our side of the table, 60 different institutions on our side of the table. It's been a complex negotiation. But it's something where if we can bring together and create consensus among disparate regulatory agencies, we have a real chance to guide the market in a way that could really get significant benefits, and at no additional cost to the taxpayer.
You know, one thing that's interested me about the challenge that we face here of helping people is the question of moral hazard. If you start giving some people relief, is that going to mean that other people are going to want it? What is the fairness and equity considerations that go into decisions about who gets this relief and who doesn't?
Yeah, Tim, it's a great question. I think there are two different ways to answer this, and there are many people in this audience that don't work in housing, and I think one of the very important lessons I've learned over time in government is that far too often the temptation is to design programs around the 2% or the 5% or the 10% of things that could go wrong, and actually miss the opportunity to help the 98% or the 90%, the vast majority of folks that aren't going to fall into that category. And you all who work in government know this, right? We often, have enforcement or other things that we design around, well, what's the 1% that could go wrong? And it actually stops the program from working for the 99%. I think the moral hazard challenge is a challenge like that. The best data shows that probably 10 to 15% of the folks who are defaulting are what we call strategic defaulters. In other words, they actually say, you know what, I could pay my mortgage, but I'm going to stop because if I stop, then I'm probably going to have a better chance of getting help. The truth is that most people who own a home, and this is common sense, you all think about your own homes. Are you willing, you may have lived in that home for 5 or 10 years, you've got kids that go to school in the neighborhood, you've got neighbors that you're close friends with. Are you going to risk losing that home, ruining your credit rating, stopping yourself from being able to buy another home for 3 or 5 years just to do that? Most Americans aren't going to do that. And yet, the worry about the 10 to 15% who might has stopped us from helping the 85% or the 90% where principal reduction really is important. So I think we've worried too much about the moral hazard, and it's stopped us from moving forward on principal reduction. The other thing I would say is there are ways to design around that problem. In the settlement discussions that we're having, it's not that hard to say, look, anybody that was delinquent as of the day of the settlement is who we're going to help. And you can't make yourself eligible by getting delinquent, right? So there are fairly simple ways that you can implement these efforts that, they're not going to eliminate the moral hazard risks or the strategic default risks, but they can be very important in limiting it substantially. And I think for the good of the country, we have to move forward on principal reduction. At the end of the day, it's holding back consumer spending. It's stopping people from moving to take jobs because they can't sell their home where they live to move to another town. So we have to get progress on this if we're really going to move forward.
Mr. Secretary, early in the administration, one of the major performance initiatives coming out of OMB in the White House was to ask the major departments to identify high priority goals, as they call them. And you had 4. They dealt with foreclosures, with rental assistance, with veterans homelessness, and with green retrofits. Maybe you could just tell us whether you think that exercise was useful and how you feel you're doing against those goals. We could discuss them individually or however you want to do it.
Tim, I'd say it has been remarkably helpful. And at a very basic level, and this is something I've often felt in government, working for a mayor like Mike Bloomberg, who was so focused on performance measurement and setting goals, working for a president who's very, very focused on doing this. You know, too often in government, we don't know what success looks like. It's dumb in some ways. It's incredibly simple, but it's incredibly powerful to just say, let's all agree on what success looks like, and let's set a specific target that can organize not only internally everyone on the team to be focused in the same direction, but actually it really helps to organize other agencies that you work with and even advocates and others that work in it. Because if you can say clearly, look, here's what our goal is, they have a rallying point. This was true. Pat mentioned our housing plan in New York City. We set this, kind of crazy ambitious goal of 165,000 units. That's more housing units than are in the city of Atlanta. And it was remarkable to see how the advocates, who were always yelling at us, you're doing this wrong, it's like, wow, this is something we agree with, and this is something we're going to get behind and support. And so what's interesting is, as the mayor leaves office, the plan isn't going to be completely done, but I would take money from anyone in a bet that the next mayor is going to carry on that plan, because all of the folks outside government are saying, hey, this is a good plan, we're behind it, you ought to keep going on it. So the sort of way that setting clear goals aligns people and creates a push to do these things. Even with OMB at times when resources are tough, you have a clear plan. No, if we don't have the resources, we're not going to achieve this goal. It can be remarkably powerful. I'm enormously proud of the work that HUD folks are doing. We're ahead of target on 3 out of 4 of our goals. But it's also not just HUD folks. And this, one of the things that we worked hard to do, and I'll tell you, there was some real brain damage associated with it early on, but we said we're going to set these goals in partnership with other agencies. Our green retrofit goal was a goal in partnership with the Department of Energy. Our veterans homelessness goal was a joint goal with the Department of Veterans Affairs. Our foreclosure goal, joint goal with the folks at Treasury. So what's been remarkable to see is the way that has been very powerful in aligning our efforts. We do HUDStat meetings with VA on a regular basis, where not only do we agree on we're using the same data, which was a huge step forward, but we're actually working much more closely together, and there aren't the same turf battles, there aren't the same arguments that there were about should we be funding this program or that program. They're actually up on the Hill lobbying for funding for our programs and vice versa, because they now know how critical they are to what we're doing. So it's been a remarkably powerful exercise. The other thing I would say, we're right now in the process, we're about to reach the end of those original 2-year goals. We're in the process of now setting those goals for the next 2 years. Mm-hmm. And in a world of shrinking dollars, what we're very focused on is how do we maintain the same ambitiousness of those goals while also recognizing we're going to have less resources. So energy retrofits is a good example. We had 159,000 at HUD that we were aiming for. And a lot of that we did with Recovery Act dollars. Now, my big focus, and I'm pushing my team, I'm saying, no, we're going to keep the same exact goal. 159,000 over 2 years, we're going to do 159,000 more. The real challenge now is, can we get the private sector to step up through our FHA insurance programs, through the savings that we're going to generate from utilities, can we get private capital to come in and fund that work rather than having it subsidized? So we're going to demonstrate, if we can be successful, that what the government investment did in the Recovery Act was to catalyze, to jumpstart a private market to actually do this. And that's, I think, an enormously powerful example at a time where resources are shrinking.
Let's talk just briefly about two of the goals. The foreclosure goal, I guess, is the one that you haven't met, right? There was a 3 million target, 1.7 million have been helped. Is that right?
Well, and this is one of the things that's interesting, Tim. It's always a challenge in government. The programs that aren't working are the ones that get the attention.
Well, it's also the biggest problem, isn't it?
Well, it is, but what I mean specifically on this is we set goals not just for our HAMP modification program, which is a Treasury program, but we also set goals for HUD's own FHA modification program. We've actually exceeded our goals in FHA. We've helped more than 1 million families stay in their homes, which is about 20% higher than the goal that we set. It hasn't gotten a lot of attention because it's worked. Mm-hmm. And so we actually, the HUD portion of that goal, we are ahead of target in terms of helping folks. So we are doing well on at least one portion. And we've been successful in other parts of our efforts around foreclosure. It's really on the modification program, the HAMP program, where we haven't met those goals, and that's the one that's gotten the most visibility.
So rental assistance was another initiative. How's that doing? And does that reflect the view in any way that perhaps we were over-ambitious in our home ownership goals as a country?
It absolutely reflects a focus that we had a national housing policy that was all about home ownership, and for too long we'd neglected rental housing. And I want to be very clear: the president is in no way abandoning home ownership as a goal. We continue to believe that home ownership done right, home ownership where we're focused not just on getting people into homes, but helping them stay in those homes, is a worthy goal. And in fact, 60% of African Americans, 60% of Latinos who bought a home last year used FHA financing to do that, and they're doing very well. They're being successful as homeowners. They've got safe, common sense products. But we also needed to balance that with raising our focus on rental housing, and we've done that. We've reinvested in HUD's programs. The challenge that we're having is the budget challenges. And so what we've focused on there, and what I think has been really powerful about setting goals in this case, we started looking at this. We started setting up the systems to do performance management around our rental housing. And what did we figure out? We figured out that we could count how many units we were funding. We actually didn't have a system to count how many units were occupied. And so we had this huge gap that we were paying money, but we had no incentive for housing authorities, or very limited incentives, to actually make sure that if they were fixing up a unit, if a family left, that they were turning around that unit as quickly as possible to get it reoccupied. So just by focusing on that portion of it in HUD-STAT, we've raised the occupancy of our public housing and our voucher programs substantially. We've cut the vacancies by about 1/3, and by next year we'll probably have cut it by 2/3. And what does that mean? That means with no more money, with exactly the same funding level, we have tens of thousands of more low-income families that have a decent, safe place to live. And so it's a very good example of how using HUD-STAT, focusing on the numbers, and having this sort of light bulb go off of, wait a second, we're counting the wrong thing, or we're not counting it at all, and really aligning all of the staff within our public housing office. They've done a great job of saying, no, we got to raise occupancy, and they've actually done it.
I'd like to return and ask another question, talk a little bit more about HUD-STAT, but let's pause and deal with the budget for a second. We are in a very, very tough climate. The Budget Control Act, divided Congress, and so on. And also we are coming off of the huge stimulus program, which added $15 billion from $45 billion to about $60 billion in the case of HUD. As you look at the budget as kind of a strategic matter, are you trying to find and identify programs that you can eliminate, duplication, overlap, outdated, not working? And is there a risk in doing that? You are, I guess, faced, you've alluded several times to the budget problem, you are faced with fewer resources. How are you approaching that?
So the good news here, to the extent there is good news, is that, and it's been interesting to see the sort of debate that happened about the debt limit and where we ended up. You know, but one of the things the president clearly said is we can't balance the budget on the backs of the poor. We have to have shared sacrifice. And if you look at the allocation that HUD had under the Ryan budget in the spring of this year, and you compare that to the allocation that came to HUD from the House, right? So Republican-led, same Republican House in the spring under the Ryan budget, and then after the debt limit bill was finalized, HUD's allocation went up by $3 billion. So on a base of about $40 billion, that's a substantial increase. And so the president really did keep his commitment that, you know, we've got tough decisions to make, there's going to be sacrifice, but it's got to be shared sacrifice. And what that meant is the good news was we weren't talking about cutting every single HUD program. The bad news is that we are talking about reductions and how do we take them as strategically as possible. And I'm not going to lie to you, Tim. There are cuts. We're one of those agencies that it looks like our budget's going to get done by this Friday. We're part of that, what they call the minibus that's going to go through. And there were some cuts that were very, very tough and will have real impacts on people's lives. But I think two lessons I would take. One is that where we've actually been able to show not just that programs are successful, but that they actually save money in the long term, we've been able to really get bipartisan support behind those programs. Mm-hmm. One example is homelessness. Not only were we able to maintain funding for our homeless programs, but we actually got $75 million for new funding for vouchers to help get homeless veterans off the street. And why? Because we can show that not just that these programs save lives, but they also save money. And the reason is, if you have a homeless person living on the streets, the typical cost to taxpayers is about $40,000 a year. Why is that? The cost of shelters, emergency rooms, jails, all of that. And it turns out that while it costs a lot of money to get that person into a housing unit, to give them the services they need, that's actually cheaper than the alternative. And we've been able to show that. And so we've been able to build support in Congress that even in tough times, we're going to invest in programs where we can show the budget savings in other agency budgets, in other places that come from those kind of investments.
And some of those savings are at the state and local level. Is that correct? So you're in a way comparing apples and oranges in terms of budget processes in a way.
That's absolutely right. And that's the second point I want to make here. Another example, what we have to do is not just demonstrate this at the federal level, but we've also had a bunch of efforts that say to state and local government or to the private sector, look, we've sort of set the table here with the Recovery Act. Now you've got to be able to figure out how to carry on these efforts with your own funding because it saves you money as well. One example, we created a homeless prevention and rapid rehousing program in the Recovery Act, $1.5 billion, one of the most innovative things that we did. And it was based on a simple premise, which is if you've got a family that falls into homelessness or is on the edge of homelessness, and by them becoming homeless and staying in a shelter for 6 months or a year, you have huge costs, not just to them, but to society as well. Think about what happens to their kids if they're in a homeless shelter for a year. They're going to fall behind in school. They're going to become less productive. That family, it's probably going to be a lot harder for them to apply for a job and keep a job because they're spending all this time moving around and figuring out where to sleep every night. What we figured out was with a relatively small amount of money, less than $1,000 typically, you can help get that family quickly back into housing or prevent it in the first place. Sometimes it's one utility bill or one rent payment. If they're in a homeless shelter, they don't have the security deposit to rent an apartment. Those kind of small payments can actually help them. And we expected to help about 500,000 people with this program. We passed 1 million people this summer, and we're still going because the average amount of the payments is so much smaller than we expected. What's powerful about that is local governments are now saying, wait a second. I had this whole shelter system set up where I'm putting all this money into permanent housing, trying to get people out. It takes a long time. If I just take small amounts of my own money and put them in the system up front, I can help a lot more people and avoid all these costs downstream. That's a pretty smart thing for me to do. And so we've got a lot of local governments that are shifting their responses. And we're going to keep investing in this, but at a much smaller level than we did before in the Recovery Act. But we've seen a lot of local governments, state governments, and foundations and others invest in this kind of approach as well. And so that's a way where we're not going to have the dollars, where we can't convince Congress to keep funding it. We've got to have other partners coming in. And the private sector is the same example. I talked about it with energy retrofits. We've got to have their capital coming in and funding the work that we were doing with subsidies before.
So we have been preaching for many years the virtues of measuring performance and communicating about what you find in your performance measurements as a way of building support for individual programs and for government at large. Now, you've done that in a significant way with HUD-STAT, and I know that builds on CityStat in Baltimore and CompStat in New York and so on. In my perception, it's harder to do at the federal level because you are not the only actor in many of these programs. You're dependent on data that's coming from state and local governments, public housing agencies, et cetera, et cetera. Can you tell us a little bit more about how you've developed that system and how you're using it?
Yep. First of all, I think you're exactly right that it is harder at the federal level. And part of it, and this is a critical thing, because setting goals is very powerful. And that means there's a lot of upside, but if you set the goals wrong, there's a lot of downside as well. You're managing to the wrong things. And one of the things, constant debates that we have, and particularly at the federal level, is, well, if I'm an employee at HUD, I want to be held accountable for something I can actually control, right? And so if you set a goal that is dependent on too many other people, too many other factors, it's going to be very hard to get alignment and a real sense of employees that this is a fair system. This is something that's really helping them. On the other hand, you have to be ambitious enough that you're not just looking at outputs. You're not just saying, well, how many dollars did we spend or how fast were the dollars spent? That's important. But did it actually achieve what you wanted it to achieve? So there's this very important balance of thinking about how do you be ambitious and set goals that really are about outcomes and changing people's lives, but also make sure that every employee can feel, yeah, this is something I have control over. And that's been a real a balance that's been hard to achieve, but it has been very powerful. The other thing that I would say in terms of thinking about how this works, it is hard work up front, because a lot of times what you figure out is, yep, we can agree this is what we want to measure. It's going to take us a year to set up the systems to really measure it, because we've got to go get data from the VA, because we've got to go get data from other agencies, or we've got to go get data from our local partners, and setting up those systems is much harder at the federal level than often it is. So it takes a lot of investment, it takes a lot of time. You can't let the perfect be the enemy of the good. Use the data you have, start measuring things and start working on it, recognizing that it's a work in progress. But the other thing that is absolutely critical is folks around that table have to believe that if there is a barrier to their success, that I'm going to make a change in that I'm going to take resources, that I'm going to be focused, and that the senior team is going to be focused on fixing that. Because at the end of the day, if this is all about accountability for them and not accountability for me as the leader of the agency, it's going to fail. And so what's been very important to me is every time we do these, we have discussions about what are the barriers to doing it? We've got every part of the agency, our general counsel, all of our support offices, technology, procurement, personnel there. And if there's a problem, we have to commit to fix it. One of the things was, you know what? We're having trouble with the data. I turned to our personnel and said, all right, we're going to give every program office one person to be able to spend full time on the data. We got tough personnel challenges, but this is worth doing. Folks kind of looked up and said, wow, okay, you're serious about it. Another one was we had this very interesting challenge around helping homeless veterans. We have many female veterans that have been victims of sexual trauma or violence overseas when they're serving. And they come back, and we now know that in order to help them, we've got to have a program that's focused on them and that is supporting female veterans. But we also found that the Fair Housing Act, completely well-intended, said we couldn't turn away men to these programs. How do we solve it? Well, we get our fair housing folks at the table, and this was not simple because, as everybody here knows, getting legal resolution of some of these things can be very long-term, very difficult. But we were relentless, and we said, we are not going to stop until we get a solution to this. And it really sent a message to all the folks around the table. This was an issue they'd been grappling with literally for 10 years and hadn't been able to solve. And I was going to put my personal attention, the general counsel, all the senior folks in the agency, to say, look, this is a problem that came up at HUD-STAT. We're not going to be successful in one of our goals unless we can solve it. By God, we're going to solve it. And we're going to keep going until we have. And so that really has sent a message. We begin every HUD-STAT meeting with, what were the follow-up items that we needed to solve last time? Where are we on them? And we're going to be relentless about making sure we get those resolved so that it sends a real message, hey, I'm being held accountable as an individual employee, but everybody's being held accountable as well.
And so that's part of the so-called game-changer reviews that you have with the Senior Executive Service. So that's a personnel issue in a way, but let me ask you to wrap that into a question about another personnel issue, and that is a question about morale in the agency. HUD perennially ranks at the bottom of the best places to work surveys by the Partnership for Public Service. But on the leadership dimension in the last one, you increased significantly, so congratulations on that.
Thank you.
I know you are conducting an I Believe in HUD campaign. What is the reason why HUD's morale seems to be so low, and what are you, how can you really address it so things get better?
Yep. So, look, one of the things I think we had to recognize coming in is that these are not challenges that get solved overnight. And a big part of the challenge was, how do we demonstrate that we actually can make progress, that we can move forward? Not that we're going to fix everything at once, because you don't go from last in the best places in government survey to first in 1 year. You probably don't even get to the middle in 1 year. So what we said was, first, let's build off what our strengths are. And one of the things we found, and Pat talked about this at the beginning, folks believe in the mission of HUD. And that shows up consistently. And look, that's why I'm at HUD. That we make a fundamental difference in people's lives. A decent place to live is a foundation of so much else that happens in your life. When you choose a home, you choose where your kids go to school. You choose public safety. You choose access to jobs and stores and other services. And so that's part of what we wanted to do, was just remind folks, hey, we know that's why you came to HUD. And to raise that level of pride. And so we started this I Believe in HUD campaign. And I got to say, I thought it could be helpful, but I was a little bit of a skeptic of how far. It far exceeded my expectations. And there was just this incredible groundswell. Employees in our field offices putting together YouTube videos of why they came to HUD, incredibly inspiring stories of, I grew up in public housing and HUD gave my family a chance for a decent life, and now I'm doing it for other families. And so that, it really, really made a difference. And a lot of it, all the senior team got involved in very substantial ways. So that was important, but it was also important to say, let's pick a set of things where we actually can make a difference. We took the employee viewpoint survey, which I talk about often as my scorecard on how we're doing, and said, where are the places that we're hearing from employees that need to change the most? And let's pick 3 of them, and let's work on those. We clearly heard that training and creating career ladders at HUD was a big challenge and something we weren't doing well. So even in tough times, we doubled our training budget. We created a whole new focus, a new HUD Academy for Workforce Learning. And one of the things that we saw significantly improve, we improved in 11 out of 15 of the categories this year for the best places to work. And one of the biggest jumps that we made was on training. So that's an example. Collaboration was another place that we heard we weren't doing a good enough job. So we spent a lot of time and focus on how do we create more collaboration and better leadership for collaboration. Our scores went up substantially in that area. And one of the interesting, you mentioned this, one of the interesting things we did is we sat all of our SESs down in a room and said, do you think the performance management system is working? Do you think you're being held accountable for the right things? And the clear answer was no. So we said, okay, you guys design a better system. And we took 2 days, some tough conversations. And what was interesting is one of the things that ultimately the SESs agreed to hold themselves accountable on was this game changer element. They said, you know what? This can't be just about individual performance. There have to be some things that if the agency doesn't succeed as a whole, we don't succeed. And so what they agreed was if we didn't score high enough on collaboration in the employee viewpoint survey, not a single SES was going to get an outstanding. Not one. So, and they came back and I said, whoa, that is serious, right? This is a game changer. And there was a lot of debate in the senior team, is that going too far? But the SES felt very strongly that if we're really going to collaborate better, we're all going to have to put our chips on the table. We're all going to have to get off the sidelines and get in the same game. And if we can't collaborate better, and if we can't hold ourselves accountable to that, then none of us should be considered outstanding. And so I was enormously proud of folks saying, yep, we know we got to collaborate better. We're going to create this accountability. We're the leaders of this agency as SES, and we're going to set an example on that. And so that I think is going to make a real difference. Because one of the areas we scored lowest this year, and the things we focused on last year, we moved the needle. Our big focus is going to be on performance, or one of our big areas of focus is going to be on performance management this year, because we're not doing a good enough job doing that. We've created HUDStat. We've created, I think, a performance management system for the agency. We haven't connected it yet the way we need to the performance management system on an individual basis.
So, Mr. Secretary, this has been a great conversation. Unfortunately, we seem to be running out of time. So I think I'm going to ask you if you would reflect as kind of the last question. We have an audience here from many, many different agencies. Everyone here, I think, whether they're in the public sector or the private sector, is devoted in their own way to public service. We're at a tough time for the public service. People's pay is under attack. There's talk of furloughs. There's talk of layoffs, and some buyout programs are happening. The very concept of government is under attack in certain quarters of our society, the very foundations of it. So as these people here in our audience go to work every day, how would you counsel them to think about public service and about what they do for the American public day to day?
Yeah. Tim, thank you for asking that question, because it is such a fundamental part of why I get up every morning and come to work, and why everyone in this audience does. I talked about the I Believe in HUD campaign, but let me mention something else that recently really reminded me of this. I was 4 blocks from Ground Zero on the morning of September 11th, 2001. And my wife and I watched the second plane fly a couple hundred feet over our heads and disappear into the South Tower of the World Trade Center. It was a life-altering experience for me, for the entire city that I grew up in. I have never, and I hope never, to live through a day like that again. But what I saw from public servants was one of the most remarkable things, the most remarkable acts of heroism that I've ever seen. Firefighters going back into that building. My own agency in New York City, HPD, was responsible for all the demolition of what remained. And so was standing side by side with firefighters, going through the debris, never giving up hope of finding someone alive, despite infinitesimal odds of doing that. And HUD and the federal government have put over $10 billion into the rebuilding of Lower Manhattan. And so when I went the week of the dedication of the memorial there this year, as I watched with my children the dedication of that memorial, it was the single most powerful reminder I think I could ever have that public servants matter. They matter in people's lives, and the work that we do is sacred. And each of us, every day we get up and go to work, ought to have some way to remind ourselves that the work we're doing changes people's lives, and that we're doing this. The irony is, at a time when perhaps we are least appreciated in the federal government, is the time that the American people actually need us most. And so we cannot get discouraged. We cannot let the slings and arrows and the anger that people feel, we cannot take it personally. There's a reason people are angry in this country. There are a lot of people hurting. And too often federal government employees can be the scapegoat. But we have to know, and we have to remind ourselves that we are making a difference in this country. And this country needs us now more than they ever have. So we need to keep pushing on, keep persevering. And so I just want to end by saying thank you to every single one of you that serves our country. There are hundreds of thousands of different ways to serve, each of them absolutely central to the survival and the strength of this country. So thank you all. Thank you.
Thank you. Thank you, Mr. Secretary. Thank you very much for being with us. Best of luck in your pursuits.
Thank you.
You're doing great work. Thank you very much.
Thank you.